Thomas, welcome to our Deep Tech podcast today. The 6th of November, live here from Berlin and later recorded for the people at home. Wonderful having you here.
Thank
Today
you for having
is
me.
wonderful. Today, our topic is, we're talking about blockchain. We're talking about beyond the hype and we're talking about real adoption of the blockchain technology. Maybe to all of our viewers out there, let's start with a little bit of an introduction. Say a few things about yourself and what you have done in the area of blockchain.
Sure. My name's Thomas Kutschera. I'm a former hedge fund manager by using AI. Also a huge buzzword where we did use AI. We trade mostly equities. We did do some crypto trading as well. Back then when stablecoin lending rates were higher and basis trades were pretty attractive. After that, I did some consulting for mostly banks, other financial institutions, again for AI, but also for quantum computing. Right now, I'm head of operations at Fountain. That is a fintech specialized in real-world asset tokenization.
Wonderful. Yeah, to all our viewers out there who were the first time here at our Tech Talks, my name is Marcel. I have worked in the blockchain field for quite a lot of years, from its beginning through the kind of the glyphs of it losing a little bit of the hotness that it had once. Have a PhD specifically on the topic of how it actually helps you in business processes with trust, which is not a super straightforward thing. So everybody says, yeah, it makes stuff trust less, trust better, trust something. But no one really had an idea about what it really is that a blockchain is with trust in a business process. When you're talking about the typical crypto ecosystem, we have a lot of people that are very reserved regarding centralized banks that are out there. And still we have Bitcoin and there's different coins over here. And still they are still banks. So I think that initial vision of we're going to replace the banks with something decentralized is of course nothing very close to the future, at least not for a method of payment, I would say. Maybe for a store of value institution, but maybe not for a method of payment. And maybe that also doesn't have to be. And so what do you think about the role of a blockchain in a typical investment banking related interactions that you have?
That I have or that other businesses have?
That banks usually have.
Well, I would say it's very limited still. And maybe just some more context to me. I'm definitely a business person, so I try to have the business perspectives. I'm very much into technology. Within the first 30 seconds, I mentioned AI and quantum computing and blockchain and whatnot. But I'm definitely not a tech person. I am a business person. So my focus is always on what's the business solution. And when it comes to blockchain, I think there are business solutions. But still the field is very much focused on theoretical use cases. There's still I wouldn't say hype anymore. The hype is over, but there's still the remnants of the hype. There's still some decent VC money going around and funding projects that, well, at least I don't see much business value in. For the typical bank, I think the actual blockchain application today is still limited. Having said that, I think there are a few banks that are more on the innovative side that have solutions implemented. These business solutions tend to be very boring, and that's why you don't hear about them too much. So yes, I think banks have blockchain solutions implemented, and these solutions add value and are very boring at the same time.
Yeah, I mean, this is the whole thing, right? When innovation comes to a certain point of maturity, in the end, you're talking about business processes and making these business processes better at some point in time. And just decentralizing something for the sake of decentralizing it because you don't trust the government, you don't trust central banks. I mean, that's a premise that one should very much think about it. I like
absolutely.
that in the European banking system, if you lose your PIN to your online banking, you can get another PIN back. If you lose your keys to your wallet, well, good luck. And That,
Yeah.
that
Or if
is,
you lose a wallet, if it's a cold wallet and you lose it somewhere in a garbage disposal or whatever.
yep, paper wallets, and someone accidentally used it to light a fire in the stove. So, well, that might happen. But it requires, on the consumer side, it requires a lot of people to be very, let's say, very careful and look at a little bit of a different approach. And honestly, I think for the vast majority of the population out there, this is just not happening. So we are getting away a little bit from everybody is managing their own wallet, and we are not using really crypto as a method of payments. But when we say this session today is called Beyond the Hype, and we are going beyond the hype. So what do you think are the current use cases where it actually makes sense to have a blockchain?
Well, just to piggyback on what you said, where I don't see us being anywhere soon, or probably never. I don't see my parents, or generally speaking, the older generation, bare knuckling it, having their cold wallets and their private keys and managing all of that on their own. I just don't see it. I think it's gonna be the boring solutions, probably having a Web 2 layer put on it, so the usual GUIs or something, and you need your Web 2 companies that implement the Web3 part into it, I think. So what I mean is, when it's a B2C solution, I think you need to have a bunch of layers on top of your pure blockchain solution, so that people feel comfortable with it. They need to have probably still some middleman. They're used to a bank, and if the bank provides a blockchain solution, that's great. But if people have to do it on their own, I just don't think they will adopt to that. When it comes to B2B solutions, however, that's probably different. I would still see adoption slower if it's a pure technical topic. So I guess if from the perspective of a bank, you're not thinking about blockchain every day, you might run into a problem where blockchain might be a solution. But if you don't have the knowledge, if you're not technical enough to understand that blockchain might be a solution to this very specific problem that you have, you will never adopt blockchain. You never implement that solution. But I think there are more and more, experts in the financial field that think of blockchain as well. So every time there's a specific problem in a bank that I have, whether it's payments, settlement, outside of banks, it might be supply chain tracking, thinking about EU regulation, digital product passports, knowing where your product comes from, supply chain again. I think that's very much a use case for blockchain, where it makes a lot of sense to implement it. It could be the right tool for this very specific problem that I have. And I think in the business world, you nowadays have a few experts that think, yes, blockchain might be the right solution. So that's where I see value. That's where I see adoption. But again, that's the boring stuff. As a consumer, I don't really care about how the digital product passport of some company is implemented and whether they use blockchain or not. But it makes a lot of sense to do it.
True that. I am recently a big fan of poly markets and of gambling on different outcomes of prediction markets. And in the end, the consumer sees is that they can gamble on who will win the presidential election in the United States. Since today we actually know who that was, and there is a blockchain behind that, but the average consumer doesn't see any of that.
Yeah.
And I
The
think
interface is very easy.
interface is easy. You don't see anything about it. You don't know what technology is it, and it's not marketed as a blockchain solution. It's a solution.
Yeah.
You had a problem in a certain world that you had, and there just happened to be a blockchain, one of the things that could make that better.
Perfect example. Gambling.
Gambling is the perfect example always. But on the other hand, when you really think about how this whole, I've been through that whole innovation cycle of blockchain, it was always this thing. So you're pushing a technology and you're looking for a use case for a certain technology. For example, when we go through the same cycle of generative AI, that we have here a new technology and we're looking for use cases. The gap between we have a technology and we have an actual use case that can benefit directly from it and make a process better right now for AI or generative AI very short compared to, we have here a blockchain and that blockchain can generally help make something better with supply chain management. And that's what I have seen in the last couple of years, is that it has stayed on a very high and superficial level, on a very strategic level. But on the other hand, the things that became operational were very limited. I'm talking now about not we built a proof of concept and writing paper about it. I'm talking about product is on the market and people or other businesses are using it. That's what I have seen in that part. And that's a little bit the disillusion that came on that side. How would you see that?
Well, that's a good question. I tend to agree, although I think I have actually less experience than you do in this field. So I'm thinking if a client has a project, they probably come with a problem they want to solve. And they might have some solutions in mind, and Gen AI is probably more tangible than blockchain because Gen AI is something I, as an individual, might have contact with already. I might have used ChatGPT or other platforms to ask the question. I'm familiar with the concept of a chatbot and maybe know what an LLM is, but blockchain, on the other hand, I don't think is very tangible. Me as a consumer or an individual, I probably don't have an idea of a blockchain, and I don't know that I have used it in the past, even if I did. So I think Gen AI is just more tangible. And if I would say I'm coming to you as a consultant and say, Marcel, I have this problem. I'm thinking of solution A, B, and C. There's probably not blockchain involved, neither in A nor in B nor in C. But as I said, you probably have more experience. What would you say? Do your clients usually come with you with just the problem, or do they have solutions in mind? And is blockchain a topic for you usually from the client perspective?
From a client's perspective, it's very different. First of all, I think it's an interfacing issue. There were large language models before. They were not super good, but they were before. But ChatGPT got this breakthrough for this generative AI, large language model approach for generative text, because the interface was that simple to use. You go to the website, you write something, and literally anyone who has ever used WhatsApp or Facebook Messenger or any type of messaging application can get something out of it. For blockchain, the interfacing issue for most of the things, when we talk about an end consumer thing, is just you need to download a browser extension, which I believe 80% of the population of this country never has done, downloading a browser extension or downloading a software for a wallet, and then getting because that's not secure, we need to get a physical wallet, set something up, write keys, note down strange words, then connect it to something, then find an application, then made a transaction, and then I have something. That's what I see in this area. The people that come to me that ask me about, I need a blockchain solution, are usually much, much further away from an actual business case and are much more on the strategic level when they come to me. Whereas the people that are in Gen AI are actually much closer to the business case and have a preliminary understanding that they know, oh, maybe an AI can help us with doing my invoice processing faster, my writing of procurement contracts faster, something. They usually have a very clear idea about what they want to have as an outcome and how it should look like as an outcome. Whereas blockchain, it's more, oh, we have here a strategic thing, and some strategic consultants told us, hey, blockchain might help us with that. So help us figure out if there is a solution for that and then implement that. Just the time, let's say in the maturity phase, when you come here from an idea to a implementation, for blockchain starts here, and for generative AI, it starts close to the implementation when we talk about the maturity. That's my experience.
Is it more of a strategic topic for your clients, while Gen AI is oftentimes already an operational topic?
It's being pushed from clients to me more by operational people than blockchain is by operational people. I never had anyone in operations who was working out in EU financial operations say, hey, I need a blockchain. Yeah. No, these were always some sort of managers that were told by someone that blockchain can help you with X, Y, Z for strategic consultants that are experts in this field. And then they realized that they are circling 3 years about the topic, and in the end, I still don't have anything operational or anything even working in a way where they have a product in their hand. Just buying. Whereas with especially generative AI, you're much more close, and generative AI is much more feet on the ground than up to there in the clouds. That's where for blockchain, you need more of a vision. How should the world look in the future of XYZ, and what do we need for this world to be there, and what can we do? And then that's why the circle and the timeframes that we're thinking about. But maybe let's talk a little bit about the actual use cases that are productive right now and that make sense. You started a very new and interesting journey with a new startup. Maybe you can tell us a little bit about that.
And then you said, if you're a hammer, everything looks like a nail. So I don't like the approach of saying, I have blockchain knowledge and now I'm looking for a problem to solve. So I very much like the approach that the founders of Mountain had, and I've known them for quite a while now. And that was one of the reasons why I joined, where they use blockchain as a tool to solve a problem that existed for a business problem. And they're looking for a business solution, and blockchain just so happened to be the best solution in that case. So what Mountain does is tokenize real world assets. And what that means is basically clients come to us with usually a portfolio of assets, not just single assets. It's usually a portfolio of, for example, stringed instruments, historical stringed instruments. Sound very exotic, but there are foundations and endowments that have a portfolio of, say, a 300-year-old Stradivari violin or a cello. And they usually have a couple of these instruments, and each instrument is usually worth a couple million euros. So it's quite an expensive asset, valuable asset. The problem they have, and where they're looking for a solution, is that these assets and the market that goes with it is very opaque. So it's very hard to get transparent information, whether it's the condition of certain assets, 300-year-old instruments. You just don't know what condition they're in unless there is an expert that you trust that gives you the answer to it. Same for prices. Prices are usually set in private auctions, sometimes by violin makers, and also tell you which condition the instrument is in. So there's a lot of power in the hands of a few players. Hence, blockchain made a lot of sense to solve this issue, to get more transparency into the market, to record the conditions that these instruments are in, the prices, where are they right now? For example, the instrument was given to a musician, they play in a concert. So just to record all of this, it's a very simple use case, but it makes a lot of sense for these clients to give them more transparency in this very opaque market. And the same could be done with classic cars, with art, anything that's valuable and where there is too much opaqueness. So you want to get more transparency, more trust, and ideally have it decentralized and not just in the hands of a few players. So that's what Mountain does.
That's quite interesting. I mean, we always speak about transparency like it is a thing that everybody always wants, right? But if I would be one of the few Stradivari holders in this world, I wouldn't want anybody to know what my Stradivari is worth, right? Because this comes potentially with downside for me. What do you see, especially in this type of market? I mean, yeah, this is giving, okay, we are sharing all of your information, but actually the biggest problem that I've seen with real world applications with blockchain is that people are willing to share that information for self-centered reasons, just call it economic reasons on it. So do we have, let's take now the market of antique violins, old violins. Do we have really in that market this equilibrium that the pain of not knowing the prices of the others is so big that I'm willing to give up the prices of my own purchases? Or are there a few leeches and a couple that are willingly putting their information in like just sponging off? Tell me a little bit how that transparency in that market kind of works.
But it's usually not an altruistic reason why people would go for more transparency. And obviously, since they are our clients, We would only do so if they want us to do so. So I would agree, not everyone wants full transparency. So you as an asset owner, you might not want to show all data points to everyone. However, then that's why you use blockchain as a solution. You can do it, but you don't have to. So we can store all data points, but we can encrypt files. We can make certain data points, for example, the price of an asset, or the historic prices of an asset, we can make that private. So not everyone sees it, but we will still record all the prices and attach the relevant documents to it. So in case the asset owner is thinking about selling it and wants to show the document or the data points, historic data points, to a potential buyer, they have the option of doing so. And it's very transparent when they show it, because now you can see all the data points that have been recorded and cannot be changed afterwards. Or if you change them, then you would see it as well on the blockchain. So that's what I mean by transparency. Not necessarily having to show everything, but you can make it transparent. These are the clients. I would just add that there are other market players that might not want to have the transparency at all, which are usually the ones that make the prices today. And they want to keep the power, but they don't pay us. So
is this really then a transparency motivation, or is this a motivation of proving that I haven't put my prices higher than it actually was because I have now a big buyer who is willing? How much is this really about transparency, and how much is it really in keeping records like they were recorded?
Well, to be honest, I think as with any business, you would only do it if it benefits you, you being the business, or even if it's a foundation. And they might have altruistic goals, philanthropical goals, but that doesn't mean they would spend money on something that doesn't help them achieve their goals. As with any business, you would only do it if it benefits you, I think. So it's not transparency for transparency's sake. I think it's just transparency because in that specific case, it helps you, or it might help you. The effect of that is still that the market improves. I think we can all agree that transparent markets, where there is not highly concentrated powers within the hands of a few, but a broad market, that there are more market participants and it's fairer, I guess that's a better market. But I think that's just the side effect of it.
It's an economic question. I'm not an economist, so I can tell you so much about that. I just know that there's, for one of the things that are in the same topic, one of the examples for zero knowledge proofs and for secure multi-party computation is actually a problem for an auction. So that people can basically do a blind auction, but later not change or say they have bid higher or lower when they see that the others hold on. So this is one of the core examples of secure multi-party computation when it comes to this. Of course, you don't have the ledger. Basically, the only difference between, of course, you can do encryption and store data over here is that you have on the blockchain, you have basically a timestamp ledger where you exactly know the state of a certain piece of information at a certain piece of important time that you have. And without the blockchain and this decentralized system making sure that no blocks get added where they don't need to or where they shouldn't get added, you don't have the problem anymore.
No sense, but why would you pay for it, or why would you use it? As you want to be part of an auction, but why would you choose this option as a asset owner or potential buyer?
For an auction, I mean, speaking about secure multi-party computation, you don't have to show what your bid is. That's the interesting part. You don't have to show your bid. So everybody goes and gives their bid once. And you don't have to disclose your bid. So you will basically give in your highest amount that you are willing to pay. Or over this, you don't have to really get information of how high the bid is. And you basically don't have these dynamics anymore. And you can be very efficient.
Got it. Makes a lot of sense. So you would benefit. As a participant, you would benefit. And that's why we use it. You wouldn't use it because it's a more fair way of doing it.
Altruistic.
Not
Not altruistic.
So we agree.
Yeah, we're going to coming to an end with the session step by step. It seems very interesting. The first idea that I had about would be to go into different types of assets. For example, wine bottles. Also something that is very. I've been talking with a blockchain wine bottling startup 4 years ago, or so, where this market is also very opaque. But on the other hand, market prices, but you don't know the availability of certain items in certain areas. So that might be a bit of an interesting use case too, of course. Classic cars there. And if you want to open up that Pandora's box real estate market, but it's a whole and complexity to it. It probably brings me to one of my last points is, what about regulation? I mean, with things like Stradivarius, no one is giving you any type of problem with recording information of that Stradivari on ledger. No one does. In the end, for processes where you have to purchase something, where you have to show proof, how compatible are these new methods that you have with something that would hold up in court, for example? And let's say you have a case, because I mean, there's no trial in the blockchain. Yeah, and you're not going to have a judge on the blockchain. How are, if you ever have a dispute about a certain piece of information, how is that working in your judicial system here in Germany or in Europe? If they get database, or do they not care about it at all? Or what is it really that does the impact on that side? And how does it work when you have actually a dispute in the court?
Very good question, very important question. I would differentiate between regulatory and legal aspects. Regulatory, I would say, is a necessary evil, so to say. Having dealt with both myself, a lot of sense to have regulation to protect these special consumers and to set ground rules. Having said that, I think Europe, especially when it comes to technical innovation, they tend to over-regulate and think about what could happen in the future and already implement regulation. Well, it's quite a different approach in America. But, the legal aspect of it, I would say, is even more important because, for example, our use case is not part of the European regulation, which is good in this case. I don't think it's necessary. The legal aspect is more important because whatever solution you choose as a business or an individual must be legally enforceable.
Yeah.
Oftentimes, that is not really part of the technical solution. Blockchain would allow you to do a lot of things, but there's not necessarily a legal framework available today. So, for example, what we do not do for our clients is we do not tokenize ownership. The reason being there is not a good enforceable legal framework for it. So technically, it's not an issue. It could do right away. Absolutely no problem. But to tokenize ownership in Europe, there are very limited options, and none of them we particularly like. So it's usually an indirect approach where it has no flexibility. So that's why we just don't do it, because there's not a legally enforceable framework for it. Everything you do and what we do is legally enforceable, because that's, I think, very important for clients. If there's ever a dispute, I mean, that's one of the big advantages of living and doing business in Europe. There's courts of law that you can trust most of the time. And if you have a legally enforceable right, and you go to court and enforce them. So that must be the basis for, I think, every technical solution must be on the ground of a legal framework that is actually enforceable.
Yes, good. So what I have seen a lot of companies struggle with is they are starting and they think when they build a technical solution, especially when it comes to ownership, then they're 80% there. They're not even halfway there. Yeah. Anyone can build a smart contract. It's not rocket science. People act like they would research a cancer curing medicine when they are writing a smart contract. It's also not rocket science to set up an own blockchain network or sidechain or whatever. That's also not rocket science. It's a matter of engineering and a matter of pain, because the documentation is immature, but it's not it doesn't mean that you are even halfway there. Because the real problem that comes to that all of these people that are too deep in the blockchain space and too far away from the real world and real world use cases that you have and the real world that you live in with existing law, existing finance system, existing regulation that you have to abide to, is just too try to get all of that complexity away from you and say, yeah, we're done here. It works. We just assume none of that is there. Then you actually build something that is, but it's not what you're doing. It's super interesting, and I'm happy to keep push you folks on what you're doing. And I think with that, we are at the end of our podcast for today. So, to all of the folks out there, thank you very much for joining us. And subscribe to the channel for our next Into the Deep Tech podcast. My name is Marcel, and we had Thomas Kutschera today with us talking about blockchain beyond hype. Thank you very much, and see you